Shifting our attention to the grain market now, we were joined on Wednesday by Doug Simon of Tredas. As the war in Ukraine continues, the grain market continues to make volatile swings up and down. We discussed marketing strategies during this volatile time in the interview, but we began by getting his thoughts on the USDA reports that were to be released on Thursday.
You have different, people seeing different things out there in the marketplace, and that's always what makes a market. If you're looking at a corn market or bean market, there's people trading in that every day, and people are lodging their opinions, trying to decide what this is going to do, and the numbers are going to be what they are. But I think a big question is, whenever I've seen them looking forward into next year's crop, is a lot of them are using very high yield numbers up into the 180 million bushel range, 180 bushel range on corn, and in the 50s on the beans. And so the question is are we going to actually realize that type of yield this year? And if you have 92 million acres planted and you harvest 80 million, if you have a 5 bushel yield drop, that's 400 million bushels on our balance sheet. So that's going to have a bigger impact as we go forward, I think, is, what's U.S. weather going to be like? Right now it's pretty dry, very dry out west, because of the kind of current La Nina. The eastern corn belt is wet on the other side of it. So, and depends on what's going to happen with La Nina. That's supposed to be fading, but we've had some pretty nice rains around here in eastern Nebraska, but we're still pretty dry. But that'll be the biggest, I think, driving factor on that, the U.S. Yield as you go forward, more so than these acre numbers.
Nothing's guaranteed till the acres are planted, and nothing's official till it's in the bin, right?
That's correct, exactly.
Let's talk about CRP. There was a big push here. A couple of groups came out encouraging the U.S. Department of Agriculture to not restrict and to lift, essentially, those acres in CRP to allow producers to plant those. Are you hearing any more chatter about that at this point?
I've heard chatter about it. I know one of Biden's economic advisors talked about keeping prices in check and releasing, CRP. I don't know if they even actually said CRP. They've talked about that in the European Union as well in terms of releasing some of those acres, which have a pretty big impact on prices, especially now where we've bought inputs at these higher prices and where the current, corn and soybean prices are. That have massive implications for risk management side if they'd release 2, 3, 4, 5 million acres, that would go into planting.
Let's get your general take of these markets right now, beginning with corn. What are your thoughts there?
Well, it's been one of the most, 2, 3 volatile weeks. I think the Ukraine situation has been the biggest disruption of the world, what I call just-in-time global trading system. You've seen since 2008 when we had $8 corn, Ukraine's increased their production massively, as well as Brazil and Argentina. And we've had 2 consecutive droughts in South America. We're going to lose a lot of production out of Ukraine, a lot of exports, and so we've got a very bullish market. But on the other hand, with all this volatility, it's created a lot of kinks in the basis market that we have. We would expect the basis would be pretty strong, as we should export more corn to Ukraine as we go into the summer. But with all the wheat volatility that's been going on, the basis levels backed off and the spreads are out of whack, and so we've had basis levels fall this last 3 weeks. Ethanol margins have been pretty low. They're starting to make more money now, so I'd expect that that's going to help our basis levels. But then also our, from that, if we settle down and we're starting to ship more corn, we've had a lot of problems with getting trains turned around because of labor issues. So hopefully that'll increase our demand on the corn side, and our basis will improve. But on the soybean side, probably going to ask about that. It's kind of the same deal. We've had a big increase in production in Brazil and Argentina. We've had a couple consecutive droughts there. The Brazilian harvest is just about done, down there, and they've planted their safrinha crop down there on corn. But again, a lot of volatility. But again, we should, because of the loss of the crop in South America, we should see more exports out of the U.S., which is going to be good for basis levels longer term yet.
You talk about volatility, and we see swings of 20 or 30 each day in the grain trade, and it's like we just chalk it up as volatility. It's unprecedented how much volatility we see in this market right now. You mentioned basis. Talk a little bit more about that. Are we seeing some strong basis out there in the countryside?
It just started to firm up this week, where like the Columbus market was probably a 10 under basis, and they've come back into about a 0. The eastern side of Nebraska, Blair, was a kind of more towards 0 as well, and they've come up to 12 over. And the Bartlett Council Bluffs market, which actually exports all of their corn to Mexico, came up to 15 over. So we've seen some other markets out west that are firmed up as they start to get the trains, moving, but we've probably improved 15 to 30 cents on basis levels here in the last week, which is encouraging because it was pretty dark there 2 weeks ago.
Mm-hmm.
So,
well, I would like to get your thoughts on how can you protect yourself in this marketplace right now. What are your thoughts on that this week?
Well, we saw new crop corn last week at 6.80, and it fell 50 cents, since during this week as of Tuesday, and then rebounded some on Wednesday. But you're getting a 50-cent move, and we're getting 20-cent swings in a week or in a day. And the beans are $1 move last week, and we're seeing 20, 30-cent moves as well. So I don't historically like to use puts, but I think this is a year where you want to look at using puts. And I talked about that the last time I was on. You can go out when you're getting 20-cent moves in the market. You can go buy puts for 20 cents against your corn to protect it because you've got these high input level costs. They're very good margins for us net when you look at where the price of we're selling corn and those input costs are, even though the prices input costs are higher. The same thing on beans. You can go out and spend 30 cents on a put, or if you don't like that, you can go lock in with futures or go do a hedge derive and still go and buy a call out of the money. We're early in the production here. Like I said earlier, if we have any drop in our production because of drought, this market could get very volatile, the upside. We've had a lot of movement here. We've been kind of gradually working higher. I shouldn't say gradually. It's been aggressively moving higher, but it could be, we could have some bigger moves if we have a problem with the U.S.